What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 12th of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to zoom out and look at the long-term picture here, not only for Bitcoin's price, but on top of that, the altcoin market, especially as we've been seeing a major bloodbath in the altcoin space, as we've been calling for the past few months. So I want to spend some time here to break it all down, take a look at the long-term picture, and if you guys happen to enjoy my rambling here, consider dropping a like. It's one of the greatest ways you guys can support the channel. And let's go ahead and start off the rambling here. I want to go ahead and kick things off by keeping it to the monthly time frame as well as the weekly time frame for the vast majority of charts we're going to be looking at here today. And we better start off as well by looking at Bitcoin, because Bitcoin has really been the market leader out of all plays in the market. It has been the safe haven people have been running towards during this kind of relief rally or pickup in price since back in January, since we bottomed out around this kind of $15,000 to $16,000 range, rallying up towards around $31,000 in April. And when we hit that big even level of $31,000, we've continued to correct lower and lower month by month, roughly around 5 to 6% each month so far. We're just midway through the month of June here. So we need to ask ourselves whether or not we are going to see some pickup here. Well, the important thing that I want to bring you guys back to here, and again, I'm a man of my word here with my indicators. I'm not someone who solely trades off of the indicator alone, but I do believe it is one of the biggest catalysts for me to either decide to go long or go short in the market. And if we take a look at the resilient strength that we've had here since January, I'll be honest, it was definitely a big move here, almost 100% move from that bottom point. If you had picked the bottom exactly, which I would assume practically no one will other than the trader who got it. The point here is that we had about 100% move in price, and even with this acceleration within a relatively short period of time, we have not been able on the monthly time frame to get a blue flip, a bullish flip here, showcasing that the trend is ready to move to the upside. Now, we talked about this back in April as a worrying sign here that we had accelerated so much in the month of March, but still, even in the month of April, could not get that flip. And the reason why is because we did not get to the pivotal point in price for that month where our indicator would flip blue. And we have continued, even though we have still held, I think, relatively sideways the majority of those gains, right? Albeit we are going down, we are still not able here to cross that pivotal price point, which again is getting easier over time here according to our momentum indicator for Bitcoin to be able to get that point. It just has to be able to continue a little bit more, and then we would have that continuation signal, the signal that a new bull market has started. And this indicator has worked great for us here according to history. This is not some, back adjusted indicator. Again, as you all know, we've talked about this before. This is a time tested indicator that has been around for decades in financial markets. And on the longer term time frames, it is great at determining when new bull markets start here for crypto. It got you in here in November 2015. It got you here in December 2011, and also here in April 2019 or in April 2020, right as you can see here when we get the blue flips. So it is important to focus on these longer term time frames. And when you have indicators that are incredibly consistent, signaling to you that we do not have that same optimism here after a 100% move, that should be sending alarm bells. That should be telling us something really is different this time. What is different though versus the last decade? Why are we not seeing this continuation of price? Well, the reason is because we did not only have anywhere near as strong about the momentum in the last bull market, but on top of that, this bear market here is going to be chock full of relief rallies. It is going to be having short periods of time where there are optimism in the market, but not enough to really carry forward a new bull market because of the fact that we don't have the liquidity. We don't have the same optimism of the last decade. The Fed is contracting liquidity. Now, the indicator is not picking up that macro factor, but it's picking up the price action. And price is telling us everything we need to know here, folks. It's telling us everything we need to know. And we need not look further than the altcoin market to know that we're entering in towards a town of pain here over the next couple of days, guys. A train of pain is coming here towards the altcoin space, and it's just starting to play out in my opinion. Now, we might see some bounce up here in the next day or two, people buying some of the dips, but I gotta tell you guys, this is something that's gonna continue to play out for some time. Take a look here at over the past few months. Back here in the month of April, down over $11.6 billion. This is just the altcoin space. We're excluding Bitcoin, excluding ETH, excluding stablecoin liquidity, which by the way is flat, which is not a good sign whatsoever, as the on-ramps are starting to get frozen and institutions don't have a way to inject new liquidity into the space. But once more, the next month here, in the month of May, a $22.7 billion decline here in altcoin market cap. And then here in the month of June, one of the biggest declines we have seen since as far back here as December of 2022 during the capitulation around FTX, an over $40 billion decline in altcoin market cap, taking us down to right under $200 billion. That is a far cry away from where we were back at those highs at $1 trillion. $800 billion of market cap wiped off the map. Now, a lot of people would say, hey, Nick, it's an 80% discount. I want to take that opportunity. But I want you guys to remember here, first off, how important it is to understand the difference from a top to bottom decline of say 85% to 85% and 90%. And the reason why I'm being exaggerated with my fingers here to such a large extent is that there is a huge price difference between these levels. I want to go ahead and just demonstrate that for you guys here. For those of you who might be trying to buy the dip here, right? That 80% opportunity. What does a 85% opportunity look like? Okay, around $200 billion or $207 billion would be an 80% correction. But if we take that to 85%, that's a $147 billion market cap. That's another $50 billion in market capitalization correction. Well, how about a 90% correction, right? That takes us down towards around $100 billion. So each of these 5% declines here we're talking about, you're basically paying, roughly speaking, and don't completely quote me on my math, but generally speaking, about 33% premium. Paying a huge premium if you're trying to buy the dip at 80% when a reality price can go to 85, 90%. Now, I'm not saying you need to completely wait for that price action. Dollar cost averaging can be a powerful tool. Getting more aggressive with your dollar cost averaging into corrective periods, that's when I like to approach it. And again, there are going to be certain plays here they're going to start to signal strength during this capitulation. And that's a big point I want to talk about here. If you guys want to know, now we're giving a lot of free content here. This is the kind of range that we are looking for to start acquiring altcoins when we're roughly 90% down here towards this $100 billion market cap. That golden line is really what I like to kind of have as my average entry point. We may not get there entirely. It may be a little bit more, a higher price for our average entry, and that's fine. But that's kind of the target ballpark we're looking for here. Now, while I will share this with you guys, it is important to note that if you want to follow what altcoins we are going to be picking up at the bottom, which plays we're going to be scooping up, which ones we think are serving as market leaders according to their price action, their fundamentals. And if you want to get access to things like our momentum indicator here, so you can use this not just on Bitcoin, but on a whole range of assets on different time frames, you guys can get access to that to our exclusive newsletter, the Dash Report. Now, for those of you who haven't heard about it just yet, I'll have a link down below in the description. You can get 20% off on an annualized basis. This is our newsletter here on the channel. We've tried to slowly but steadily move away from doing too much sponsor content here on the channel. We really want to focus here on doing the newsletter. And this is our main way where you guys can get juicy information beyond the free content we put here on the channel. You get access to a 20-page report every month, the Dash Report discussion group where you can talk with other Dash Report members and ask questions, share content. But on top of that, you guys will get access to our private momentum indicator here. You'll get access towards a whole range of resources such as our mid-month webinar where you can ask me questions, and you get coverage not just on crypto, but on the macro scene here and which altcoins we're going to be looking to buy. So if you guys are interested, again, you can get 20% off on an annualized basis if you check out the link down below in the description. But I want to go ahead and continue to build on this topic here, guys, and really dive into some of the altcoin plays here that we've got to keep an eye on here. Now, you guys may recall, all right, and I'm not here to just say I told you so or anything. There's a lot of you who have been in cash, and even for those of you who are in these positions, I know it can stink. But, you know, it's again important here to hear out the other opinion that might be on the other side here and see if you can get some valuable information on it. You guys may recall for the past couple months, since back during January when Solana pumped up from around $8.20 up towards relative highs of $26, we warned people, especially as we saw the sideways price action here, that this is a fake pump. This is not real. There is no increase in development in the Solana community. There are no people who are looking to really grow Solana long term. Maybe there are some developers, some good-hearted people, but the vast majority of the Solana ecosystem was artificial growth, artificial numbers in their TVL or total value locked. So much of it was just absolute noise. And the VCs and the kind of capital entranches that actually build up the financial backbone to a lot of these ecosystems. They were unloading back here, guys. They're out of the picture. They made their money. They don't care about Solana users. They only care about building the narratives. And trust me, I remember back in 2018 when everything was quiet, they were the guys starting to build up positions in these plays. These VCs were getting ready for the next move, and they got really lucky considering the COVID stimulus that came in and all the rampant speculation, and they made a crap ton of money. Plain and simple. It's the name of the game with some of these VCs, guys. You got to be careful. And look at what happens this month. Down 26% from those prior highs at around $27. For those who FOMO'd in at the top half here, you were either break even or now down in the red. And that stinks, right? That stinks to see that. But it's not just Solana here. I'm not just here to ride on Solana. MATIC as well, right? Again, much higher than where it was back in June. I'll give it that. It's still 100% up here from where it was back in those capitulative lows. If you bought in at that range, that's the thing I really hate hearing is people say, oh, Nick, you really missed this pump on this, or you didn't buy this and stuff. It's like, yeah, did you buy it? Did you buy that exact price level? I'm really tired of hearing things like that, guys. And that's the kind of petty behavior that happens when you're starting to realize that the narrative you're chasing doesn't hold weight. It's one of the stages of grief that you start to run into when you realize that, hey, wait a minute, maybe I'm overexposed. Take a look here at MATIC here. While it had made a major acceleration from its lows, 33 cents all the way up towards $1.50. Not bad if you can get it. Almost in this case, a 4x in valuation, right? Excuse me, yeah, 4 or 5x valuation increase, right? Ever since then, back in February, we are now down, coming up here on 66%. Is that bull market activity to us? Is that new altcoin cycle kind of material? No. We just had our worst month here, 28.5% down. And look at our indicator, showing very clearly since back in April and May that this is a bear market. We are not ready. And look what it does here when we are in a bull market. Catching a blue flip here right before the big go to the big move here on names like MATIC that went from around 4 cents all the way to $3. I'm much more interested in capturing that wave than trying to time bottoms. I'm much more interested in seeing which plays are actually market leaders, not market laggards that are going through a massive distribution phase. And I'm certainly not happy to promote you guys to go out and buy these things, right? I'm not here to push that kind of stuff. I'm here to mention when I've got skin in the game, when I see the momentum in, and when I see the signs of a new bull market. It is going to be very challenging this time though, guys, and it is going to hit all plays because we do not have the Federal Reserve to come save us each and every time like they used to. Take a look at Cardano as well, down from $3 all the way towards 28 cents, over 90% correction. Sounds like the great discount opportunity of a lifetime. Well, again, bear in mind the difference between a 95 versus 95% correction. We have had a red flip since back in April of 2022. And if we get that 95% dip, that is going to be giving you an opportunity to get Cardano at 15 cents versus the 28, 30 cents that we're roughly at now. And again, I know a lot of you might be thinking I'm bashing the projects and stuff. I'm mainly focusing on price action here. But if you do want to talk about fundamentals here, and I understand many of you are in the same ballgame. I'm sorry if I sound a bit like over the top about it, but I want to be realistic here. This is your guys' money here. And think about it. What are these projects doing right now that is really going to buck the trend, get people excited about crypto? I can't name one DeFi app because I do a lot of research. I've been doing that since 2016 and 2017 when I got into crypto. I've been doing that in traditional financial markets. I'm looking for some straws to hold on to get excited about this space. And I'm not seeing anything right now. What I am seeing is a major pullback here that is going to give us a capitulation opportunity of a lifetime. And if we can be patient enough and have the liquidity ready on standby and not get caught trying to, trade leverage trading or do all kinds of ridiculous things, going in an all risky kind of meme coins, that's the kind of stuff that's going to trip you up. If you can avoid that, you're going to get to buy in at some really cool prices. And ADA in this case will still have been setting the low much higher, more than 10x from its prior lows in the last bear market. It's not a big ask, considering I can't name any time I've needed to engage in the Cardano ecosystem. Sorry. No offense to Charles, no offense to ADA fan holders. It's just the reality here. DeFi fell really flat in its face, not just at Ethereum, But in all the other alternative layer 1 ecosystems, how about the layer 2s here? Arbitrum, Optimism. Well, Arbitrum dropped 12% the other day and is continuing to dwindle. No buyers coming in on that dip, right? Last time we had this, right, when we had these kind of pullbacks, buyers started to come in, at least hold up prices. They're not doing that this time. We're now down over 50% from those prior highs, almost 50% here, roughly speaking. How about Optimism? Well, Optimism on the monthly time frame shows us we're down from $3.28 all the way towards $1.11, back where we were roughly pretty much wiping out all the entirety of the gains back in January. Yikes, that is not good to see. These are the plays we should be supposedly getting excited about. They're the layer 2 plays, the scaling plays. They're relatively small cap plays with a lot of big potential. And buyers aren't taking this discount opportunity. In fact, every single month we've been grinding lower here. What's going on here? That's not the narrative I've been sold about. Let's go ahead and keep looking, right? We got a couple more here I want to take a look at. BNB, right? After all the kind of calamity we've had this past week with Binance and Coinbase and the SEC, you would expect that if this was all kind of noise, right, we'd be seeing BNB pick up. But day by day, I mean, since back here on June 5th, I mean, just coming up on a week now, and we are still seeing corrective forces at play here, which tells me that maybe the kind of things that the SEC charged on the surface are maybe just the tip of the iceberg. Maybe there is something much bigger here. And if that's the case, that's really bad news. That's really bad news for the crypto space, because if Binance does have some serious faults at play here, that's driven price down here to its lowest level in line with where it was back near February of 2021. If we break this line and head down here towards 142, that's not only billions of dollars of market cap wiped off, even if it is all just noise, if Binance is going to be okay. But if Binance is not okay and this sinks, you're talking about not only tens of billions of dollars of crypto market capitalization, the third largest crypto out there, if you're excluding stablecoins, the third largest crypto in the market, going to practically nothing, like FTT token, the FTX token, right? If Binance goes under, the largest, most liquid exchange in crypto, for whatever reason, that is going to be absolutely terrible for the space. Now, I'm not saying that that's going to happen here. What I am saying is that it's very likely that the fear continues, that the market is not in a good mindset for a while. Investors start to take advantage of the returns they made for a long time, and maybe new buyers come in here at around 140, 150. Probably the more likely scenario. That crypto doesn't die, that crypto doesn't completely falter off as an industry, but we need to get better capitulative flows. It's not just because I'm shorting the market or anything, guys. I'm not shorting anything right now. We don't have any official short positions yet, right? We are definitely looking at building them very soon with the key momentum indicators that are signaling here that it's time to get ready. But I gotta be honest with you guys, I'm not here to just badger price because I've got short positions. I'm just letting you know what I see in price. I'm in cash right now, right? As we have been since August of 2022. Now this leads us towards looking at some key charts here, because I know a lot of people say, Nick, okay, fine. Cardano, MATIC, Solana, all these names, let's say they're heading for the dustbin for a while until the trend gets better. But what about ETH? Right? We keep talking about the altcoin market specifically, but what about Ethereum, right? EIP 1559, ETH staking, aren't all these things going to help Ethereum buck the trend? And it has been one of the more resilient plays behind Bitcoin. Well, I think that that's, while a fair question, we've got to take a look here at the chart, guys, and take a look back at our momentum indicator. And just like Bitcoin, you will see here, we did not get the blue flip. And we are moving lower as we speak. And again, to that question about, what about all those things that should be supporting Ethereum's price? Well, the problem with that is because while ETH staking may be great, while EIP 1559, which burns Ethereum as people utilize the network for transactions, all of that is good. Just because ETH may be deflationary even with all those elements, it does not change the fact that the much bigger question we need to ask ourselves, similar to the halving event for Bitcoin, is as of the existing supply, are there going to be much more buyers or much more sellers? And if we are going to have much more sellers, that means Ethereum's price is going to go down. There is no other way to cut it here, guys. And we are going to get not only potentially an opportunity, very likely, to buy back where we could have bought back in January, as many people pointed out. Oh, you could have bought back in June of 2022. But on top of that as well, I think we are going to get proper capitulative lows and a correction that is weaker than the last correction of the 2018 bear market. All I'm asking for is around $400 ETH to $500. That's the target range, right? So that's the key point here that I want you guys to think about here, that these things can go a lot lower. And if you can't stomach that, if you don't have the capital to really continue dollar cost averaging in at a lower price, you could end up buying positions that don't get back in the profit zone for a long time. I want to go ahead and close things off here, guys, because while I understand a lot of people don't like Gary Gensler, I know some people are going to say, oh, you're paid by the feds, Nick, you're this, that. Guys, I don't. Come on, seriously? Like, stop with all the insults and the kind of petty stuff here. I'm not a supporter of a CBDC. I'm not a supporter of any of these kind of things. But we can't deny here that there is serious things that went on over the last couple of years that regulators have a justification to step in on. And we are seeing tokens being delisted from places like Robinhood following these allegations from the SEC. They're not trying to stand up against this. And there's probably good reason, because when you have people like Kyle Davies and Suzu, founders of 3 Arrows Capital, going on the New York Times for a personal little interview and talking about, we're living in Bali and Dubai, and we're spending time surfing, playing video games, keep it casual, and you see no remorse from guys like these who basically, through rampant speculation, deceiving investors, lying to people, wiped away billions of dollars of value by being overexposed into one altcoin. This was, I want you guys just again, like, take a step back here. I was thinking about this really over the past weekend. That these were the guys who, like, the supposed mavericks, or like the heads of the crypto industry. They came up out of nowhere, similar to Sam from FTX. Right? I remember when they were like nobodies in the space, and then they became the new crowned kings. I'm not here to say I don't want to come across as jealous or anything. I don't really care. I'm making a point here, which is that this shows that there was some real criminal behavior in the crypto space over the past couple of years. Some people got away with blatant murder. I'm not saying that we as individuals don't hold any responsibility for it. We rightfully do, to a large extent. Many of us got a little too greedy for our own liking, if we're really being honest with ourselves. But at the same time, there were a lot of people who outrightfully deceived. They broke the law in many ways, and they basically were living a life, and still are living a life, where they feel, well, it's their fault. I played the game. I mean, is this the kind of crypto that's going to go to new bull market highs? I'm not trying to be negative here, guys. I think one really big misconception I've ran into over the last more than a decade of me trading, investing, and also doing YouTube here since 2017, is sometimes you got to be really optimistic when things are looking rosy and good, and you've got all the foundations and fundamentals for a bull market. And sometimes there are periods of time where the sun may be shining outside. It's a beautiful day where I live right now. I've got family and friends who I love dearly. I believe there's a lot of exciting, potential, maybe innovations that might be in the works that could materialize over the next couple of years. The world isn't ending, but it doesn't mean that asset markets need to go higher. It doesn't mean that prices are guaranteed to go up. And this is the brutal awakening that unfortunately I think a lot of people are going to have to face here. I know a lot of people say, oh, Nick, you're late to the bull market, this and that, and it's going to be just like every other time, and halving, and all these narratives. Guys, we're in a fundamentally different environment than where we were back over the last decade. The 2010-2020 period was a wonderful period for speculation. As Stanley Druckenmiller said, one of the greatest traders of all time, he said it was the greatest everything bubble he'd ever experienced in his trading career. Everything was moving higher. You could have monkeys throwing darts, throwing darts at a target, and they would outperform most funds. It was so easy. Easy times are over. And I'm only trying to be honest with you guys that it is not the easy times anymore. We've got to be smart about where we trade. We got to look for opportunity in other markets. And that is a big reason why, again, we have the Dash report here. right? We've got a powerful community where we are looking for these opportunities here. We create a ton of great free content here on this channel. And I want to help carry you guys forward towards finding those opportunities. And I'm not always going to get it right, but we've got great risk management strategies. And that's what essentially allows us to make sure that we're not going to lose our shirt. We always come into things with calculated risk, right? And we're doing spot market trades. We're looking at options, all kinds of different vehicles to try to trade the market. And if you guys want to know how I'm going to be shorting Bitcoin, at what price, and then eventually how I'm going to be rotating those profits, ideally, into averaging into Bitcoin, then you guys can check out the link down below in the description. But outside of that as well, you guys, if you just happen to enjoy this content, if you like my rambling, consider dropping a like. That's also a great way you can support me here. But until the next video, everyone, try to keep as sane as possible in these times. And again, understand here that we are going through a fundamental shift in the crypto space. It's going to be a crazy ride, but I'm going to be here during bull and bear markets. We're going to be covering the opportunities, and we're going to be capturing that next bull market. I can guarantee you guys that. Take care, everyone. Have a wonderful rest of your day.